Hello guys, Doomducks here. Welcome to this video. So today we're gonna talk about the recent runners in the last 2 weeks. And I would say in the last 1 month, we don't really have any exciting plays. So I selected about 3 to 4 plays for you guys to take a look. And also gonna share my analysis and the reason why I traded or didn't trade it for those tickers. So before I start this video, make sure to click the like button and subscribe. And let's get into the video. So the first one we have is CDT. This one was pretty much a straight fade, nothing very exciting, did not push. The one that was tradable was SLE, which it did very similar pre-market action. Faded about 75%, then re-pushed and consolidated. This one didn't push. It started around 50% or 30% from yesterday's close. So it wasn't a very good play until it reaches around 10 or 11 before it's shortable. It's also low flow, and the biotech, I would suggest to avoid pretty much all the biotechs in upcoming year and also end of this year as well. They are not tradable and very hard to predict. So let's take a look at the most recent runner, which will be FEMY. This is a multi-day runner. Did the initial breakout around 150-ish, went all the way to 4. This one was actually a long opportunities because it dipped around the support around 1. We break the support right here, which is September 26th. The support was formed around 1.3. So going long around 1.5, which is a decent opportunity. The re-breakout level was 929, so 1.8, going along from 1.8 or even around 2 is not too bad a choice. And you traded around 100 something million, 120 million shares on this day, gapped up the following day. Typically we're looking at a double day consolidations to form dollar block or resistance for us to short into if the stock decides to gap down. Now we had gap down on the following day, gap down to around 20% or 15%. Typically when we're around into a multi-day runners, the first red day shows about negative 26% as a max drawdown on the current day. And we were already down, I think it was 20 something percent. So it's not really worth it. Re-short around 3.1, which we're already down 20%. So maximum in average, we can only profit about 6%. In terms of the final day, this one draw down 35%. It was not shortable. First of all, we're pretty far from consolidations. The only part we can risk of, which will be yesterday's close, around $4. So even though you can size in around 3, probably can only size in about maybe 30K to 40K shares and cover around 2.3. Overall, this wasn't a very clean multi-day runners. The consolidation range is all over the place, between 3 to 4, so that's 30% of the consolidation fluctuating range. To pick the risk, it's going to be very difficult. So say if you really want to short after the first red day, you can probably profit maybe 15%, including borrow fees. And the other reason why I didn't short FEMY, because the borrow fee was extremely expensive, around 20 cents on a $3 stock, so that's 10%. And I'm shorting a ticker that's already down 20%, which I don't think it's really worth it. So going into the following potential play in upcoming weeks, MSS, this is a classic IPO tickers, first green day, up about 120%. So if we see continuations tomorrow, and we all want to see consolidations, and typically IPO play needs to be over 300%. So the extension itself, the ticker has to go above $12 to $11 to $12-ish. As the formal consolidations, depends on how pre-market action will be, and hopefully we can get a decent consolidations and we can get overstaying gap down after the consolidation. That'll be the potential play throughout this week. And if you are interested in our chat room and services, make sure to check out the link below. Other than that, I will see you guys in the next one.